In today's show, Bitcoin bulls respond with 150 million short squeeze above $53,000. Can the BTC price go higher? Checking out the latest from Lex Mavosky. He wrote 150 million of Bitcoin shorts liquidated on this brief move up. Nothing smells better than roasted bears in the morning. That's right. Also in today's show, I'll be sharing the 5 things to watch out for in the Bitcoin market this week as greed and leverage gets flushed out. That's right. As Preston Prish tweeted yesterday, looks like this interim sell-off might be reaching its conclusion, which it is. Also in today's show, breaking news, JPMorgan to let their clients invest into Bitcoin Fund for the first time. What makes this so ironic? Back in 2017, Jamie Dimon said that Bitcoin is a fraud and will eventually blow up, and even threatened to fire any of his employees for investing into the king of all crypto, but things have turned a full 180. Max Kaiser responded to this, as we predicted several years ago. Jamie the tapeworm Dimon would get embarrassed and humiliated by Bitcoin and flip. He is truly a special kind of American what? That's right. Max also tweeted, the fiat money cartel tries repeatedly to collar Bitcoin, but with 100x returns still on offer, it's guaranteed there will always be at least one dissenter, killing the cartel's efforts. Unlike gold, $220,000 in 2021 still in play. Also in today's show, legendary fund manager Bill Miller says Bitcoin is not a bubble. Bitcoin entering mainstream as demand grows faster than supply. That's right, supply is growing 2% a year and demand is growing faster. That's all you really need to know, and that means it's going higher, said Bill Miller. I'll be breaking this down for you in today's show. We'll also be taking a look at the overall crypto market. You can see Bitcoin, Ethereum, and all the major altcoins currently breaking out and in the green, but where's the Bitcoin price likely to go next? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And yesterday I released the Bitcoin freestyle entitled Stack and Sats, which you can see right here. If you missed it, be sure to check it out. Now today's show is brought to you by our sponsor BlockFi, the leading provider of financial products and services for crypto investors. Here's where you can put your crypto to work. They're paying out a 6% annual percentage yield on Bitcoin, so you can literally have your Satoshis work for you. They're also paying out 9.3% on USDT. Now what I love personally about BlockFi, besides the fact they're so easy to use and that there are no hidden fees, is the fact they're backed by the biggest names in the industry, including Winklevoss, Fidelity, Morgan Creek, and Coinbase. And they have a special promo running right now where you can get up to a $250 crypto bonus with a deposit of $25 or more. All you need to do is click my referral link in the description. It'll take you here. Then click this yellow button that says sign up, and you'll notice the referral code already pre-populated for you to take advantage of this special bonus. So what are you waiting for? Click the link right down below and let's start stacking those sats, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. The entire market is in the green and pumping. Once again, I have a lot to cover, so let's dive right in. Roughly $150 million worth of shorts were liquidated within a span of hours as the Bitcoin price rose from around 47,000 to now over 53,000 today on April 26th. The crypto market as a whole saw a strong short squeeze as Ethereum, Binance Coin, and other major cryptos also rose by around 15% in the same period. Following Bitcoin's 12% recovery within a single day, the futures market has completely reset, as I predicted in yesterday's episode, with funding rates hovering at neutral levels. Now let's discuss why this Bitcoin short squeeze is so bullish. A short squeeze in trading refers to when short sell orders in the futures market are liquidated in a short period. When shorts are liquidated, short sellers are forced to buy back their positions, now ironically causing the buyer demand in the market to increase. Hence the number of shorts rapidly declines and long contracts or buy orders begin to dominate the market. Now when the number of longs increases substantially, the funding rate of Bitcoin spikes. This happens because the funding rate increases when there are more long orders in the market. If the funding rate is above 0%, buyers have to pay short sellers a portion of their position every 8 hours to sellers and vice versa. In the case of Bitcoin, in the last 24 hours, despite Bitcoin's strong rally, the funding rate has remained relatively low. That's right. In fact, according to buybt.com, the funding rate across major exchanges for Bitcoin is currently below 0.01%, which is below the neutral rate, as you can see right here on your screen. It means that there are still more shorts than longs in the Bitcoin futures market, which could could catalyze more upside. This trend is bullish for Bitcoin because it comes after a mass liquidation of short contracts. Lex Mavosky, the CIO of Mavosky Capital, shared the following on crypto Twitter: 150 million of Bitcoin shorts liquidated on this brief move up. Nothing smells better than roasted bears in the morning. That's right, and he shares this graph from Glassnode Analytics. Traders believe Bitcoin could aim higher in the short term, and the near term traders say that 55,500 price level is an important one to reclaim for a chance at new all-time highs. Johnny, a cryptocurrency derivatives trader, shared on crypto Twitter: swept the lows and now we have a very strong bounce. We are not out of the woods yet. Reclaim 55,500 and then we can talk about a new all-time high. For now, play it level by level. Strong reaction so far. So there you have it. So here's the synopsis. As long as Bitcoin remains above 51,000 heading into the US market open and aims for a recovery above 55,000, the chance for an all-time high in the foreseeable future would remain strong. That's right. I couldn't be more bullish on the king of all crypto. Let me know if you are in the comments right down below. And before I break down our next story of the day and I share with you the 5 things to watch out for in the Bitcoin market this week as greed and leverage gets flushed out, as well as breaking news, JPMorgan to let clients invest into Bitcoin fund for the first time, as well as legendary fund manager Bill Miller saying Bitcoin is not a bubble and that Bitcoin is entering the mainstream as demand grows faster than supply. But first, let's take a quick look at the overall crypto market. We can see literally everything in the forest green and pumping. I love to see this. Bitcoin up 7% for the day, trading above 53,500. Not too shabby considering like 24 hours ago, we touched the low of 47,500. We have Ethereum up 7.5%, trading just under $2,500. XRP up 15%, trading at $1.24. Binance Coin up about 6%, trading at $334. And Polkadot up 5%, trading at $32. All right, now let's break down our next story of the day. Bitcoin is keeping the bulls and bears guessing as it opens a new weekly candle in the green, heading away from 50,000. Now I want to share with you the 5 factors that could shape the Bitcoin price action in the coming days. Right here on your screen, you're looking at the 1-week Bitcoin candle chart, which looks bullish. But let's start with number 1. Stocks are steady as the dollar dives. Stocks are once again cool this week after the macro picture presents a familiar mixture of hope and misery driven by the coronavirus pandemic with no overall direction. However, the impetus for Bitcoin to track a macro narrative is barely existent, as the day's price movements already proving it. What does the future hodl? Tesla and SpaceX tech Noken Elon Musk summarized on Saturday in this tweet, as you can see right here. What does the future hodl? And what's interesting, Tesla, one of the big name Bitcoin investors, is due to report their earnings after the Wall Street close. When it comes to the dollar, the opportunity for Bitcoin is more skewed to the upside, as the US dollar currency index is continuing its decline after closing below 91 on Friday. The index, particularly over the past year, tends to be negatively correlated with Bitcoin/USD. Now, the next factor to keep your eyes out on this week, Bitcoin regains that $53,000 resistance mark. Bitcoin spot price action is already offering surprises, and unlike last week, it's the bears who are being caught unawares. Preston Pish tweeted this yesterday. Looks like this interim sell-off might be reaching its conclusion. Hashtag Bitcoin, as you can see right here on your screen. Now, the scope of the dip was a shock to some investors, coming despite hordes of new buyers entering the network. On-chain metrics as a whole have remained in the green, lending further weight to the theory that current circumstances are temporary blip in an otherwise enduring bull market. I couldn't agree more. Market is very emotional, over 2% swings on closes. Philby, co-founder of Trading Suite, Decent Trader, told Telegram subscribers last week, take note, volatility will be inbound soon. I am quite bullish, but I think we need a bit more of a shake before up. Could be wrong about the direction, but not so much about the volatility, so buckle up. Now, the next factor to keep your eyes out on this week for the Bitcoin price action is difficulty set for the biggest retrace since November. That's right, in fundamentals, miners continue to recover from a Chinese power outage that truncated the network's hash rate overnight earlier in April. As a result of flooding, as before in Bitcoin's life, large segments of China's mining power disappeared from the network, leading to a drop in hash rate, which at one point neared 25% of all-time highs. Since then, miners have begun adapting, while the drop in mining difficulty will allow smaller operators to mine more profitability and provide an incentive for maintaining network security. This drop, set to occur in around 5 days' time, will be the largest negative move since November 3rd, when Bitcoin was still at $13,000. I also like to point out that the Bitcoin price follows the hash rate. So when we see new hash rate all-time highs, that typically means Bitcoin is about to break out to a new all-time high. Now, difficulty adjustments form an essential, if not the most essential, part of Bitcoin's ability to maintain itself regardless of external factors influencing its modus operandi. Recent months have been characterized by upticks in difficulty, which together with hash rate have seen consistent new all-time highs. Should history continue to repeat itself, price action should also revert to gains in line with their recovery. Now, commenting on recent events, Adam Back, the CEO of Blockstream, cautioned observers on their choice of statistics resource and argued that the drop had not in fact been as large as some suggested. Quoting him right here, Bitcoin hash rate back at 157 exahashes per second, about 5% below 168 exahashes peak, mostly recovered from 25% down at 125 exahashes, he tweeted on Sunday. Now, the next factor to keep your eyes out on this week, sentiment tends towards extreme fear. Along with shorts and over-leveraged longs alike, it seems that irrational sentiment in crypto has finally been shaken out. That's the conclusion of the popular Crypto Greed and Fear Index, which uses a basket of factors to determine trader sentiment and therefore what's likely to occur on Bitcoin as a result of their actions. Checking out the latest from the Crypto Greed and Fear Index, it shows we're currently rated a 27 in fear, which is as low as we've seen it in a very long time. Yesterday was a 31 in fear, last week a 74, and last month a 65 in greed. Now, previously, as new all-time highs of 65,000 appeared, the Fear and Greed Index was nearing historic record highs in line with the tops of the bull market pass. At nearly 80 out of 100, a sell-off was clearly on the cards as per the metric, which took around a week to react to the $46,000 price dip. Now, however, the pressure is off as the index has gone from extreme greed to fear, as I pointed out, effectively, which is a reset of sentiment, which provides scope for further price gains. Now, the next factor to keep your eyes out on this week, analysts highlight the price dip as the silver lining. It's not just private individuals who have undergone a serious mood change. According to other metrics, erratic behavior from professional traders has been effectively cleansed from the market. In his latest update for Morgan Creek Digital, co-founder Anthony Pompliano, his market newsletter on Friday, as well as analyst William Clemente, noted that longs had once again become an attractive bet. There were some silver lining to this event. Greed and leverage was flushed out. He wrote the following: in addition to the liquidations, this can be illustrated by funding rates. To peg the perpetual swap contract to Bitcoin spot price, funding rates are used. When the majority of traders go long, it becomes profitable to go short, and vice versa. During the event, funding rates flipped negative, meaning it became profitable for traders to take the long side of the trade. This has shown to be a buy signal in the previous two times this happened during this bull market. And also approaching a full reset is the spent output profit ratio, known as the SOPR, a metric which tends to dictate the local market bottoms. Currently, the SOPR is approaching the full reset mark, meaning the Bitcoin price has either reached or is very closely to reaching the bottom of the current correction, William Clemente added. Now, before I break down our next breaking story of the day, JPMorgan to let clients invest in the Bitcoin fund for the first time, as well as legendary fund manager Bill Miller saying Bitcoin is not a bubble and that Bitcoin is entering the mainstream as demand grows faster than supply. But first, let's take a quick look at the overall crypto market cap, sitting just under that $2 trillion milestone with $164 billion in volume in the past 24 hours, and current Bitcoin dominance at 50.2%, and the current Bitcoin market cap at $1 trillion even. That's right. Now, checking out the top gainers within the top 100, we have Harmony up about 35%, trading at 13 cents. Phantom up 31%, trading just under 40 cents. Polygon up 28%, trading just under 50 cents. Arweave up about 27%, trading at 30 bucks. And Waves up 22%, trading at $16.70. Now, checking out the top losers within the top 100, we have Cello, barely in the red, trading just under 6 bucks. And then we have virtually just stable coins, because almost every major crypto is currently pumping and in the green, which is a beautiful thing. Now, out of this list of the biggest gainers and losers, which altcoins are you particularly most bullish on right now during this bull market? Let me know in the comments right down below. All right, now let's break down our next breaking story of the day. As Document in Bitcoin points out, Bitcoin is inevitable. Back in 2017, JPMorgan CEO Jamie Dimon said Bitcoin is a fraud that will eventually blow up, and even threatened to fire any of his employees for trading Bitcoin. Now, as Max Kaiser points out, as we predicted several years ago, Jamie the tapeworm Dimon will get embarrassed and humiliated by Bitcoin and flip. He is truly a special kind of American what? That's right. JPMorgan Chase is preparing to offer an actively managed Bitcoin fund to certain clients, becoming the latest, largest, and if the CEO's well-documented distaste for Bitcoin is any indication, unlikeliest U.S. mega bank to embrace crypto as an asset class. Talk about coming around full 180, right? The JPMorgan Bitcoin fund could roll out as soon as this summer. Two sources familiar with the matter told CoinDesk institutional Bitcoin shop NYDIG will serve as JPMorgan's custody provider. The third source said JPMorgan's Bitcoin fund will be actively managed. Multiple sources told CoinDesk that's a notable break from the passive fare offered by crypto industry stalwarts like Pantera Capital and Galaxy Digital, which let well-heeled clients buy and hold Bitcoin through funds without ever touching it themselves. Now, Galaxy and NYDIG are now offering Bitcoin funds to Morgan Stanley clients, and the JPMorgan fund will be for private wealth clients. A source familiar with the situation situation, told CoinDesk. I'll be keeping you up to date when we hear more on this breaking story. And checking out this other tweet from Max Keiser this morning, the fiat money cartel tries repeatedly to collar Bitcoin, but with 100x returns still on offer, it's guaranteed there will always be at least one dissenter killing the cartel's efforts. Unlike gold, $220,000 in 2021 still in play. I also like to point out Max Keiser's short-term Bitcoin target, which is $98,000. Let me know if you agree or disagree with Max Keiser's bullish price predictions. And before I break down our final story of the day, legendary fund manager Bill Miller says Bitcoin is not a bubble and that Bitcoin is entering the mainstream as demand grows faster than supply. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 760 plus videos right here on my YouTube channel. Also have some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsyes.com. Also be sure to smash that subscribe button right below this video in the description to receive daily premium crypto news alerts every single day, just like this. You can also find me on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes. You can also follow me on Twitter. My Twitter handle is Crypto News. Yes, and for those of you active on Facebook, as I am, I do have a private crypto Facebook group entitled Crypto Alchemy with over 18,000 cryptopreneurs just like yourself from all over the world. To join it, click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, I do have a private crypto Telegram chat, which is uncensored. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. And for those of you on TikTok, I recently created my TikTok account. Be sure to follow me there. All right, now let's break down our final story of the day, shall we? Longtime value investor Bill Miller is the founder of Miller Value Partners and is currently serving as the chairman and chief investment officer. He is also the co-portfolio manager for opportunity, equity, and income strategy funds. Prior to Miller Value Partners, he co-founded Legg Mason Capital Management. He was asked in an interview recently with CNBC last week whether there was a lot more upside for the Bitcoin price. Miller replied, "There are many, many different ways to look at Bitcoin. The simplest way is just the supply and demand," emphasizing rising institutional interest in the cryptocurrency as it enters into the mainstream. He elaborated the following: "Supply is growing 2% a year and demand is growing faster. That's all you really need to know. And that means it's going higher. I don't think this is a bubble at all in Bitcoin. I think this is the new beginning of the mainstreaming of it." And I couldn't agree more. Let me know if you agree with Bill Miller in the comments below. And comparing Bitcoin's recent rally to what happened back in 2017, which he said was a bubble, Miller acknowledged that the price of Bitcoin will be volatile as seen in the recent price swings. Quoting him right here, "Even back then during the bubble, it went down 20% on 5 different occasions. So with Bitcoin, volatility is the price you pay for performance." That's right, because volatility equals life force. Look at all the assets in the world with very little or no volatility, like the US dollar. They're dead, my friend, where we have Bitcoin and Ethereum, very highly volatile assets, but also increasing substantially year after year. Miller shares the same belief as many Bitcoin investors that the cryptocurrency is digital gold. Gold is about a $10 trillion asset category, and Bitcoin is just 1 trillion, and it's infinitely divisible, or almost so. That's right, 1 Bitcoin can be divided by 100 million Satoshis. It's easily transportable and can be sent anywhere in the world if you have a smartphone, so it's a much better version as a store of value than gold. I agree 100%. Furthermore, he pointed out there's 15 trillion of negative yielding bonds out there, so why would you have that when you can own something that at least has the potential to go up? That's right. While Miller does not think that Bitcoin is a bubble, some fund managers do, such as the Guggenheim CIO Scott Minerd, who recently said Bitcoin looks very frothy, warning of a major correction that could push the price of the crypto down to between $20,000 and $30,000. I disagree with Scott Minerd. I think he's just playing the game. He predicts long-term Bitcoin $400,000, but I think he's trying to buy Bitcoin on the low and bring the price down. If you're to ask me, it's called FUD. And in addition, the Bank of America Fund Manager Survey for April shows that the majority of fund managers see Bitcoin as a bubble. Very interesting. Just like Jamie Dimon saw Bitcoin as a bubble, but now he says, hey, if you can't beat them, join them. All right, now for a quick recap of what I covered with you right here in today's show. Bitcoin bulls respond with 150 million short squeeze above $53,000. Also in today's show, I shared the 5 things to watch out for in the Bitcoin market this week as greed and leverage gets flushed out. Also in today's show, I shared breaking news: JPMorgan to now let their clients invest into Bitcoin fund for the first time, which they did a complete 180. As we all know, back in 2017, Jamie Dimon said Bitcoin is a fraud that will eventually blow up. Also in today's show, I shared legendary fund manager Bill Miller says Bitcoin is not a bubble and that Bitcoin is entering the mainstream as demand grows faster than supply. So where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And real quick before I go, I want to give a special shout out to BlockFi, where you can put your crypto to work. They're currently paying out a 6% annual percentage yield on Bitcoin, so you can literally have your Satoshis work for you. Now, their other flagship product is a crypto-backed loan. You ever wonder, how can I access fiat liquidity without selling my precious BTC or cryptocurrency? Well, look no further than BlockFi, because with a crypto-backed loan, you can get an interest rate as low as 4.5%. And they also have a special promo running right now where you can get up to a $250 crypto bonus with a deposit of $25 or more. All you need to do is use my referral link in the description right down below. It'll take you here. Simply click this yellow button that says sign up. You'll notice the referral code already pre-populated for you to take advantage of this special offer. So what are you waiting for? Click the link right down below. Let's start stacking those sats, and I look forward to seeing you in tomorrow's episode. Peace.